right here is for my aunties and my uncles and them. Okay? Listen, if you are over 40, you need to be doing this right now to start increasing your retirement. Now, for those who don't know me, and before I jump into all this good information, for those who don't know me, my name is Paris Smith, and I was able to retire myself from the 9 to 5 at 24 years old. I was able to do this through trading a strategy that a lot of people don't know about called covered calls. So it's simply a strategy that I trade once a week. I don't have to use any indicators. I don't have to read charts. I don't have to be glued to my screen all day. The income is reliable and it is consistent. I know how much I'm making every single week to pay these bills, okay? Now, if you are interested and you're like, what is this stock market trading? Like, what is this strategy? I got you. I have a free stock trading masterclass that's coming up this week, and I'm going to need you to go ahead and click that link and secure your seat, okay? Secure your seat, and I'll see you there. All right, let's go ahead and get started. Listen, aunties and uncles. Aunties and uncles. Now, if you're under 50, you can stay. It's fine. It's fine. It's real good information, okay? So these are the things you need to do in order to increase your retirement, okay? We need to increase them funds, all right? So number one, and I'm looking at my notes. Number one, because I'll be all over the place. We have focus on dividend growth stocks. So let me just tell y'all something. Have y'all heard of blue chip stocks? Just put I heard in the chat if you know what blue chip companies are, blue chip stocks are. So basically, investing in companies with a consistent history of paying and growing dividends. So companies such as Visa, right? Visa, MasterCard, Pfizer. I'm just going to name a few, okay? These are companies that have a consistent history of paying out dividends, and it's growing dividends. So if I were you, I would just do a simple Google search and type in stocks with dividend growth or dividend stocks and just do your research starting there just to get familiar. But the cheat code, okay, the cheat code is the blue chip stocks. I'm going to read them. So we have Visa. I love Visa. MasterCard is probably one of my most favorite stocks. And I'm naming just a few. Some of these I actually hold right now. And some of these I don't hold right now, which means that's like a part of my portfolio. Visa, love Visa. MasterCard, love MasterCard. We have Pfizer. We have Walmart. I love Walmart. I have a little obsession with Walmart. And Costco. Costco? Listen, I got me some Costco. Love Costco. So these are just examples of companies that have like a consistent payout in dividends. And you got to make sure, you got to do your research. Go on Yahoo Finance, okay? Let me give y'all a quick resource so you ain't got to do too much. You get Google good, though. Go on Google, too. But as for me and my house, I go on Yahoo Finance and do all your research on there. Everything is there that you need to know, okay? Just search the stock and look at their history and see if they've been consistent in paying out dividends. So all dividends is basically you're investing your money into a stock. Let's say you invested into, I don't know, ABC stock. And ABC stock is $100. Just because you invest into ABC stock, they giving you a cool $6.50 just by holding it, right? It's like their little treat. It's like their thank you gift or whatever, just for you investing into their company. So that's what a dividend is. It's the owner of the company that's saying thank you. Let's see who was in here. Thank you, Jess, for investing in our company. Here is $6.50 per share, right? So that's number one. So focus on dividend growth stocks. Now, what I would do is we're going to take this a little step further, and I'm about to spit a lot of game, okay? If I were you, I would kind of, separate this out a little bit. It's cool to have one broker account. It's cool. If you have Robinhood, get out, because Robinhood robbing people. We don't like Robinhood. We don't do all those brokers. We don't do the baby brokers. We do big boy brokers, okay? So like the Charles Schwab, the E-Trade, the Fidelity. We like those. So go ahead and get you one of them and open up multiple accounts under that one big account. And I want you to get separate accounts for the dividends, and then we won't continue, but just have one for dividends, okay? For your holding. All right, let's continue. Number two, use covered call strategies for income. Now, this for the grown and sexy. Okay, hear me out. This is for the grown and sexy, 50 and older. If your goal is to grow your retirement account, or maybe your retirement lacking right now, this is what I need you to do. Now, on them stocks that you found, I told y'all the big boy, the blue chip joints, right? The blue chip. Now we don't do Robinhood. Anyway, we have that, and we have the dividend. Right? So that's one. Two, we're going to find some other shares that are stable, low volatility. Okay? We're going to find those stocks so that we can trade cover calls on. Okay? So selling cover calls on stocks you already own to generate additional income. But in this case, my grown and sexy, we're not using cover calls for income. Not right now. We're going to use the cover call, the profits from trading covered calls, to increase your retirement. Okay? So that's what we're doing. We're not trading weekly. Yep. Listen, I preach, I teach to trade weekly covered calls, right? So that you can have weekly income, consistent weekly income, and all of that cool stuff, right? That's cool. It's cool, but this goal is to grow our retirement. So I want you to trade 1 month out. 1 month. Just once a month. I told you I'm about to give y'all some games. So listen, not only just once a month, I want you, for my grown and sexy who is growing your retirement account, I want you to pick growth stocks only. Growth stocks only. Now, let me just back up a little bit. I don't want y'all to be confused. Now, my strategy when it comes to trading covered calls, I trade weekly covered calls, right? That is amazing, okay? That is amazing. We take our profits, we add it up, because we trade four times a month. It takes us less than 30 seconds. We don't gotta log in and be scared, crossing our fingers and our toes, freaking out. We made our money up front, right? That's cool. That's what I teach. Moo gotta go. Anyway, let me stay focused. That's what I preach, and that's what I teach, right? When it comes to my grown and sexy, if you're 50 and older and you're trying to focus on increasing your retirement, I want you to trade just once a month. Okay, once a month, because the premium is juicy. Okay, that premium juicy. And the goal is to just continue to grow your wealth, right? Continue to grow your wealth. And when I say a growth stock, I mean stocks that are, if you look, so I'm going to give you an example. I want you to look at stocks that are, that have no dividend, a stock with no dividend at all, and a stock that's 5 years, you see the trend going up, right? Every year for the past 5 years, the revenue is increasing. That's what I want you to look for. The reason why I say no dividend is because stocks that don't offer a dividend, them things crazy. Okay, especially if it's a stock that does really well every single year. Top line revenue jumping. Listen, if it don't offer a dividend, listen, premium's crazy. Once a month? Y'all listen to me. I hope y'all writing this down. All right. But when it comes to trading the cover call strategy to increase your retirement, I want you to select a stable stock, okay? And I want you to use the income to reinvest, because we're not taking the income and we're not paying our bills and we're not paying down our debts and we're not going on vacations and all of those things that I teach, right? This for the grown and sexy. So I need you to trade a cover call, use the income, the profits that you make, instead of spending it, we're going to reinvest it back into the stock. We just want it to keep growing and growing and growing and growing, right? All right, let me continue. All right, number three. So let me back up. Number one, we have focus on dividend growth stocks. And that's one way to grow your portfolio, right? We're invested into stocks, blue chip stocks that's growing in equity. You're also making a dividend on top of that. So that's like two things going on. Then you're going to have a second account. Remember I told you the E-Trade, Charles Schwab, Fidelity. Not the Moo, not the Robin Hood. Okay, not the Cash App. We're going to open up another one. And this one, it's just for our cover call trading. We're going to separate that thing a little bit. Just so we can look at our growth, easily look at your growth from the two accounts. That's just how my brain works. And I tell my students this all the time. I teach them the same thing, but it'd be a little different. But anyway, this is for the grown and sexy tonight. But anyways, let's continue. Number two was use cover call strategies, and we're going to reinvest that mug. Okay. Number three, diversify with strong ETFs. I told you I ain't holding back nothing tonight. So what an ETF is, think about this. Think about you have a bucket. I need a bucket. I don't have no, well, I got one, but it's a basket. Think of a basket, right? You got a basket. And you have apples in there. You got some bananas in there. You got some oranges in that thing. Some pineapples in that thing. You got some little cherries up in that thing. So think of it as like a bucket of stocks, of companies. The apple is NVIDIA. Well, the apple is Apple. The banana is NVIDIA, right? The orange is Microsoft. I'm just naming some of the ones in the S&P 500. Okay, so think of this whole basket of stocks, this whole basket of companies, all in one stock though. That's the ETF, right? So if you diversify with strong ETFs, meaning investing into ETFs, you're diversifying. So now we got the dividend stocks, we got the cover call trading, and now we're investing into strong ETFs. All right, let me read this. So investing in ETFs focus on high dividend yields because ETFs also offer dividends. Hey, John. I think Johnny. Hey, Johnny. Offer high dividend yields, which is dope. You have the stocks, which is cool, blue chip stocks, right? But you also have ETFs that's paying you a high yield dividend, which is awesome. So let me continue. Invest in ETFs, focus on high dividend yields, dividend growth, or sectors for long-term growth. So here are some examples of some really good ETFs. And I also have one of these. I don't have the second one, but listen, it's still good. Anyway, so the first one is the Vanguard S&P 500. And it also goes as VOO or VO. However, it's VOO. It's VOO. So it's basically the S&P 500. So if you think of like all the stocks that's in the S&P 500, which is 500 different companies, but they pick the best companies with the best, track record. What the best track record? They went ahead, threw those companies in, and when I say that thing, listen, I know retirement and saving for retirement can be so boring. I know, and it's like you're saving. Like, who wants to do that? But when I say VOO, my God, that thing grew 29, almost 30% last year. I need somebody to do math on that. If you invest $10,000, how much did your money increase in 1 year? If my grown is sexy, if y'all got, we'll say $50,000, how much is 30% on $50,000 in 1 year? VOO is powerful. First of all, the equity moves so fast. It's like a stock. So it's like in the 500s. It moves so fast. That's one. Two, they have dividends. They offer dividends. And so that's my next one, job. I think that's job something. So that's my next one. The next ETF, strong ETF, is from Charles Schwab. It's the Schwab. It's SCHD. Yeah, SCHD is the ticker. It is also a ETF. So it's Schwab. If you want the whole name, the whole, what it's called, it's Schwab U.S. Dividend Equity ETF. That's their ticker, SCHD. Schwab is also another one that is a really popular ETF that you could literally set and forget, put your money in there and don't even log in anymore. Like, yeah. So let me continue. I hope y'all do a little research on this too, so y'all can get familiar with some ETFs. It's okay though. I'm gonna wake y'all up. All right, let's continue. So number one, we're going to run it back. Number one, we have focus on dividend growth stocks. This is for my 50 and older, if you want to increase your retirement. Focus on dividend growth stocks, blue chip. Okay? 2, use cover call strategies to reinvest. 3, diversify with strong ETFs. And now we are at number 4. Okay, now we're at number 4. Now, I always get a lot of questions from my students. They be like, Paris, I have a retirement account from my job. It's been sitting there for so long. I had a burp. Do you think I could transfer that over? Do you think I should keep it in the account? My thing is, I recommend, transferring it out and at least into your broker, like if you have E-Trade or Charles Schwab or Fidelity or one of those, and creating a separate account just for that account. I would do that. So you can have like if you want to do it starting from start, you can have your dividend account, your cover call account, then your retirement account once you transfer them funds over, right? We're just gonna put in little what's car see, I ain't even about to mess it up. It's I'm not even gonna mess that word up because y'all hear it. It's coming out. It's compartment. I can't do it. Let's stay focused though. Let's stay focused. Now, I always recommend them to like transfer it out, but make sure they're not like if you're not going to get any penalties or anything. Most of the time, if it's a retirement account, it has to go into another retirement account. Or you're going to get taxed if you're not 59. And we don't want that. We're not trying to get taxed and penalized. We don't want Uncle Sam to take all the money. We want to keep our money. We just want to transfer it out. Tax account to tax account. All right. Now, number 4, maximizing tax advantage accounts. I hope y'all about to pick up what I'm putting down, because there's some heat right here. Now, contributing to a retirement account like the Roth IRA account is tax free. I'm going to break it down a little bit. So what I mean by tax-free is tax-free withdrawals for retirement, like in retirement, right? So here are some benefits from opening a Roth IRA account. So we have the tax-free growth, which is when you invest, the investment grow tax-free, which is amazing, within the account, and you don't owe any capital gains. You don't owe taxes on capital gains, dividends, or interest. I don't think y'all hear me. For my grown and sexy who are 50 years old, y'all know, I think the retirement, is it 59 for tax accounts, for like IRAs and stuff? I know for a Roth IRA, you have to be 59 and a half, but your monies that you then grew in your retirement account, Roth IRA retirement account, you don't gotta pay Uncle Sam. You don't got to pay Uncle Sam for the capital gains when you sell the stocks or the share or the ETFs or whatever. You don't have to pay on the dividend income from all the dividend that's been reinvested. And you don't have to pay taxes on the interest. As long as you are 59 and a half. And they have a five-year rule or something like that. The whole thing is entirely tax-free. I need y'all to put some fire flames in the chat, in the comments. Let's go ahead and put some fire flames in the chat and in the comments. That's crazy to me. I just can't believe. It's too good. It's too good. It's too good. Now, when it comes to my rich folk, okay, my wealthy folk, my seven-figure folk, okay, I'm talking to the seven-figure folk. This right here, Roth IRA, is beneficial for you. The people that are in the higher tax brackets, that's beneficial for you. Because y'all already know how Uncle Sam come for us. All right. I hope y'all picked up what I just put down. Number five. This is my favorite right here. Now, I told y'all in the beginning that you could invest into stocks and make a dividend. And I told y'all that we're going to reinvest that dividend, right? All right, so hear me out now. Hear me out. Now this for my folks, my aunties and uncles that may want, to strategize an income. Because y'all know sometimes in your retirement, now we talking about in your retirement, y'all know the government don't be funding like that. Okay, it don't be funding like that. So this for the folk that have retired, some things that you can do to make some income. Okay, we're gonna go back a little bit. So one, of course, you already know, pretty much the same strategy, but this time cover call. You can cover call trade on stocks, but you just gotta make sure it's not a growth stock, because we don't want it to be like too crazy, too volatile, too fast moving, or anything like that. It could be a solid company, but not a stock that's like growth stock, right? So of course you can get income that way, but we also have building a dividend ladder. So you can literally strategize your dividend payout. So let me read what I have, because I'm going all over the place. I'm trying to have some more structure. 2025. Now, construct a portfolio, right, where dividend payouts are staggered throughout the year to ensure consistent income. Let me tell you something. For my grown and sexy, okay, 50 and older, and if you're younger, I do this too. Once you build up your wealth, your retirement account is looking good. You can retire. You're comfortable with what you have grew in your broker accounts, right? Now you can use that money, invest into dividend stocks, high paying dividend stocks, same thing, the blue chip stocks, all that stays the same. But instead of reinvesting, now we're going to use that income or that money, the dividend payouts, as income. And we're going to be strategic with it. We're going to stagger that thing throughout the year. We're going to come up with a whole plan and stack it. Just so that you know that there's consistent income coming in, right? After you didn't retire. And then we're going to combine that with cover call trading. And we're just going to use that income instead of reinvesting it. We're going to use that income too. And we're going to combine it. And look at you. You sitting pretty. You doing all right. All right. Now, so there are some stocks that varies when it comes to like their payouts and stuff. There are some stocks that pay out annually. There are some stocks that pay out quarterly. Then there are some stocks that pay out monthly. You can put together a whole plan and have some consistent income coming in. Too good to me, okay? Too good to me. Then, of course, you want to like diversify and stuff, like the different sectors. Like we don't want to focus on just one sector, like tech. We don't want to focus on like the other sectors, like finance. We also want to focus on sectors that's like less affected when it comes to like market downturns or like recessions or little stuff that happens. Things happen sometimes, especially in America. But anyway, presidents and stuff. You know how that go. Got Uncle Donnie back. You already know how that go. But anyway, so focus on, at this point, my retired folk. Now you're going to focus on the sectors that are that's less impacted. So we're going to stick with like the healthcare sector. Healthcare sector is solid no matter what. It might come down a little bit during recession, but we gotta live. So people gonna keep paying for healthcare and health insurance and stuff like that. Of course, you have like the utility sectors and stuff like that that are like pretty solid. So we're gonna look for companies like that we're going to like that start diversifying. But the companies that offer really good dividends and premium, because we're trying to do cover costs too. So and then also, this is one of my favorites. Okay, this is one of my favorites. Now this can go for anyone that's listening. If you're not grown and sexy, 50 and older, uncle and auntie, and you like me, young 20s, listen. This is what I do when it comes to my retirement. And when I say I am obsessed when it comes to my retirement, I don't play with it. I don't play, especially 2024. I was really like locked in all the way when it comes to my retirement. I know I'm young and stuff, but I just know the power of having a financial education. You can't tell me nothing. You can't tell me nothing. So hear me out. This is what I do. And all 26 of y'all, go ahead and like the live, okay? Because I'm nothing but gems. Go ahead and like the live. I need to see the live go up to 18 likes, okay? 18 likes, and I'll be happy. All right, so anyways, now this is they call this dollar cost averaging. That's what they call it, okay? Thank you for the one person that just hit like. Y'all go ahead and like the live for me. Okay, so they call it dollar cost averaging, right? So basically you think of like a fixed amount that you're investing. I feel like my thing about that. You think of a fixed amount that you are investing that's going to go straight into maybe we'll stick with like ETF, right? I need my charger. We'll stick to like an ETF. So let's say, I'll give you guys what I do right now. Hold on, let me plug this in real quick. Hold on now. Okay. Okay, so let me tell y'all what I do right now. So what I do right now, when it comes to, I have two different things that I do. So when it comes to like my retirement account, I send 500 every single month to that account. My first initial deposit was 10,000. Boom, let that sit. I'm not taking it out. I'm gonna let it invest, do what I need to do until I retire. 52 is my goal, right? So I deposit 10,000. That's not what I'm talking about. I'm talking about coming up with a fixed amount that you're going to contribute to your retirement account or your other account where you're purchasing stocks and you're trying to do the dividend strategy or whatever, right? So 500 goes to my retirement, right? Then 600, I spend 600 a month that goes to my account where I'm just like purchasing stocks. Like every single month, I'm just looking. I'm just like trying to find opportunity to buy. Most of the time is when the market red and when everybody freaking the heck out. That's my favorite time to buy because everybody freaking out and I'm cashing up. But anyway, so 500 goes into my retirement. 600 goes into my just regular long-term holding stocks account, right? So coming up with a fixed amount. And this is for the dividend paying stocks. If you want to utilize the strategy to make income through the dividend paying stocks, what you're going to do is think of a fixed amount. I want you to divide it by 4. If you can only do 200 a month into these, your retirement account or your long-term account, whatever, then you're going to have to do $50 a week, right? Set it up on auto. So how I do it is I do it that way. My stock account, $150 a month. $150 a week is withdrawn from my bank account and it goes straight to my broker account. And I break it up. So I do 150, 150, 150, 150. Because if I see a big chunk of 600, I'm mad. I am mad. Where did that 600 go? I'm mad. But when I do 150, I don't see it. I don't see it when it go out. So if you can't do 200 and you can only do $100, right? $25 a week. You paying $25 at McDonald's. Send your funky $25 that you be buying at McDonald's and buy you some stock that's dividend paying though, because we trying to get that strategy going, right? And then my other account, break that up. I think it's 120. Is it 125? Nah, it's not 125. I don't even know. It's 500 though that go into my retirement account every single month. So I break it up though, because I don't want to see too much. I ain't got $100 don't hurt. $100 something don't hurt. I don't see it. But if I saw 500 just gone into that account and then 600 gone into this account, I'm freaking out. Where my money? I don't want to invest it now because it's too much taken out. So I want you, even if it's $40, that is all you can do. $10 a week, I need you to go ahead and set it up. And you could work it out. Set it up, break it up, auto withdraw from your bank into your broker and automatically start investing it. Set up the automation inside your broker to automatically invest it into either your retirement side or the other side, the long-term stock dividend side. All right, let's continue. So that's that. Now, if you want to get a little spicy with it, I told you we have to diversify, right? We got to start diversifying. Now, if you want to diversify a little bit more, you can trade cover calls on ETFs, right? You can trade cover calls on ETFs too. So just go ahead and find you a couple really good ETFs. Do your research. Make sure it's solid. Look at the last 10 years because we don't do that 5-year stuff with ETFs. We got to look at the last 10 years. Just do your research. Just make sure it's solid. And trade cover calls on ETFs too. All right, this is my last one. This is my last one. So oftentimes you may have to do this. And every wise investor does this. The thing is, you have to sometimes shift your portfolio. I think I told y'all yesterday that At one point, I was trading every single week, and my first goal was to pay off my debts. Then boom, paid off my debts. Then I'm like, all right, we gotta shift it because I paid my debts. Now what we doing with the money? All right, we shifting. Now the goal is trade every single week. The income I get from that, I'm paying my bills. All right, income quadruple is looking good. What we doing now with this extra income? We shifting. All right, now I'm paying my bills with the cover call income. Now I think I want to birth a business. Like, let's start investing in some businesses. Then I did that. Real estate. It was Airbnb though. It was Airbnb. I got a whole story on that. I don't want to talk about it right now. But anyway, so think about, like, often you will have to, depending on like how sometimes finances change, your situation, circumstances change, like anything can happen. So think about like the moments where you have to gradually shift and just be ready. Just always have a plan. That's what I'm trying to say. Always have a plan. When it comes to the high risk stocks, make sure you diversify it. Not too many stocks that's high risk. We want a well-balanced portfolio. Some in ETFs for retirement. Then we want to do a little cover call with ETFs. Then we want to trade regular stocks. And then we want to hold regular stocks. Then we want to hold stocks with a dividend, stocks without one, because we want the growth stocks and we want the stable ones. Then we want to make sure the sectors are like balanced. We don't want too much in tech. We don't want too much in healthcare and all the other, industries and stuff, sectors and stuff. We just want like a well-balanced portfolio. So that should be a part of like your risk management, I guess we should call it. So having a plan, always be 2 steps ahead. Listen, a good trader, a good investor is always 2 steps ahead. You like, bye-bye, like you already know what time it is. You know what you're going to do. We don't stress over here. Not when you have a financial education. We don't do that. We don't stress. But my grown and sexy, y'all listen to me. Listen to me. I need y'all to get in on this. I need y'all to really get started, okay? I don't be wasting my breath for nothing. I could be in my bed right now. It's like 8 something. What time is it? 7. I could be in my bed right now. But I decided to show up and talk to y'all for 40 minutes so y'all can pick up what I'm putting down and start learning about stocks and investing and growing your wealth, because we're not about to be 80, 70, 60 just wishing that we would have did something sooner. But most of you guys, or us in general, we don't have the education. So I'm here to wake you up, okay? I'm here to wake you up. But with that being said, if you are interested in learning more about this, learning more about cover call trading and all the amazingness on this side, I need to see you at my next free stock trading masterclass. It's going down this week, okay? It's going down this week. The link is in the description. Go ahead and register for that. Secure your seat now, okay? Secure your seat now. And that's pretty much. I hope you learned a whole lot. I'll be back tomorrow with stock market tea of the week. So simply just giving you a recap of the stock market for the week, and you will, trust me, learn a whole lot. But anyways, I hope this was good to you. It was good to me. And that's it. That's all. Love you guys. Love you. Go ahead and put your heart up on the screen. Go just don't do it. Put your heart up on the screen. All right, bye, y'all. Love y'all. Bye.